It's Thursday and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, we have Andrew Cox with a shipper update, and Zach Strickland's back with us, and he's going to give us a carrier update brought to you by PowerFleet. Stay tuned.
Everyone, and welcome to your Thursday carrier update presented by PowerFleet. I'm Zach Strickland, back from the vacation, a long overdue one at that. But the freight markets did not take a vacation this week, as we can tell by looking at our outbound tender volume index. We're seeing that blue line there. That is the current year's outbound tender volume index, pushing through 2018 there in the orange. So the mythical 2018 year is now left in the dust as outbound tender volumes for the United States have finally pushed through 2018 levels. Again, we're talking about at the decline of the 2018 levels back in that July period, where we saw the freight market really start to show the most stabilization as it had in the last probably 12 months or so during that period of time. We are on the opposite trend, however, here. Very anomalous trend line, though, as we're looking at volumes really continue to increase throughout July and then into August, as much as 26%, 30% higher year over year in terms of volume, especially on 2019, which again was a pretty depressed year in terms of freight market activity there in the green line down there. So again, volumes continue to increase. What's it doing to capacity? It's keeping it tight. So outbound tender rejection index here, the current year in that blue mountain that we're so familiar with, well over the previous couple of years. I'm sorry, this is the outbound tender volume index. Outbound tender volume, the outbound tender rejection index was well over 2018 for the first time. Outbound tender volume index well over the previous 2 years. Again, 26 to 30% over those years. Again, this is not a trend that we normally see in July into August. We normally see some sort of stabilization for both figures as we see rejection rates start to come down and then not start to pop back up sometime late in August, potentially into September, as that end of the third quarter starts to make things a little bit more bouncy. But outbound tender volumes, again, a very strong rejection rate, up over 21% right now. The highest values we've seen since 2018, over that March of 2018 period, where we did see a staggering increase in tender volumes. Again, a little bit more strength to these in terms of trend line. We've been watching volumes and rejection rates steadily climb since about, well, for volume since about mid-April, for rejection rates since about mid-June. So again, a lot more fierceness behind this rise. We're probably going to see this continue for a longer period of time than we saw back there in March. So where are we seeing some of these changes? Weighted rejection index, combining those volumes with the weekly change in tender rejection rate. Looking right over here in the map, you can see right along that I-70 corridor from St. Louis into Indianapolis, Columbus, just south of Pittsburgh into Harrisburg there. We're seeing significant tightness week over week. We're seeing those darker blues on the weighted rejection index, so that means a value over 8 in the weighted rejection, largely due to the fact that rejection rates are increasing in most of those markets. You can see some of the consistent performers here. You can see Columbus leading the pack today at 10.9 on the WRI. St. Louis in the green here. Ontario, California right there above it. Still showing a staggering amount of tightness out west on the west coast. And we see also El Paso showing back up on the border as being one of the stronger rejection rate changes week over week. Again, there's tightness all over the country right now, but these are just the markets that you definitely need to pay attention to if you're looking at operating in the spot market, looking for increased volumes. A lot of carriers are falling out of the route guides right now all over the country, but these are the markets that you're going to definitely want to pay attention to if you are entering and you don't have a load pre-planned just yet. These are some of the more volatile markets. Let's break down St. Louis real fast. So outbound tender rejection index combined with the outbound tender volume index over there on the chart, you can see both of them are trending higher. Rejection rates, however, are definitely moving up a lot faster, up over 24% there, or 34% on the outbound tender rejection index for the market itself. Tender volumes, again, having increased steadily over the last couple of weeks as well, keeping that capacity really tight. Where the volumes and tender rejection rates are we seeing the highest out of this market? Tweener, mid-haul, long haul. So anything over about 450 miles coming out of St. Louis should see some tightened capacity. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, welcome back. What do you have for us today?
Thanks, man. It's good to be back on a vacation back from Georgia. I've got a little bit of talk about the consumer economy. While we are seeing those massive rise in volumes, I question how sustainable it is, because we're seeing a lot of this consumer data that's been sputtering here for the last couple of weeks. So this is, of course, some lagging data from the government, from the Commerce Department. This is personal consumption expenditures. This is a month-over-month look here, with the two down months being March and April, and then the previous 2 months. So this is looking at June as our last month here. While we did see a rebound in June, I think we were up 5.5% or so off of a really strong month in May, which we were up 8%. We're just seeing things kind of sputter. Again, this is lagging data, so we haven't had the month of July yet, but I do have some more timely data for us to look at here after this chart. But I'm worried that things are kind of just moving along pretty much sideways at this point.
I mean, Andrew, that's an excellent point. When we're looking at today's economy, last month's data was always useful when we're looking at a trend standpoint, kind of setting the tone of what we can expect. But now each month has like its own characteristic of its own.
Yeah, everything changes so quickly now with this new environment. The case outbreaks definitely change the way the consumers behave. But here, this is give a little bit more of a timely look at some of the consumer data. And this is, of course, that Bank of America data that we look at quite often. And it breaks it down year over year, by day, by sector. So we've just really been moving sideways since, and this is the last week up to the last week of July. The travel sectors, the airlines, the lodging, and entertainment are way down. Lodging has picked up a little bit. You can tell also by the gas spending has picked up a little bit. We're now running in the negative 10 to 15 to 20% range. That does have that has a little bit to do with gas being, gas was cheaper now than last year. So people are out and driving, and you can see that in the lodging too. People are out and spending time in hotels like I was in Georgia. But overall, we're seeing a lot of yellow and sideways number. Total card spending is the real important one here, and it's running in about the +1 to -1% range, and it's been there for pretty much the entire month of July. So like I said, pretty much straight sideways.
And one of the things I'm noticing here, and this ties back to the recent economic data release, of course, GDP, one of the lowest numbers we've seen in history. And one of the big things to take away when we're looking at freight and we're looking at the overall economy is a lot of people forget that there's a disconnect between goods and services. And looking at some of the top 3 hardest hit areas, they're all primarily services.
Yep.
Things that don't move freight, but we're still seeing these historic volumes because we're all still seeing those online e-commerce goods moving as well.
Yeah, that's a very good point. Because of the lockdowns and the lack of services available to people have shifted their spending to goods, and that's definitely benefited freight. That's one of the reasons we've seen volumes up in the 13,000 OTVI, which is a great thing for freight, good thing for shippers. And moving one more on, this is kind of a forward-looking. This is the consumer sentiment data. We spoke about this when we got the flash number a couple weeks ago from the University of Michigan. We thought then that we might get a small revision down. That's exactly what we've got when it came out just the other day. Again, we're back down in the month of July, back down to the kind of pandemic lows, meaning that people they're tepid. Consumers are worried about the case outbreaks. They're worried about that money that just ran out. They're worried if there's going to be another stimulus moving forward. There's still 16 million people on unemployment benefits, and those are likely to be drawn down considerably. So that's going to be a big hit to consumer spending and purchasing power. So we've got some headwinds ahead of us, but the freight volumes are still steady, and shippers are doing pretty well right now.
A lot of uncertainty. Andrew, thanks so much for that update. Where can people find more?
You can go to FreightWaves.com/passport for all the latest. We had to skip this week's great quarter, guys, but we will be back next week at 2 p.m. on Tuesday.
Excellent. Looking forward to it. Thanks so much for tuning in. That's going to do for the shipper update, and that's also going to do for this Thursday edition of FreightWaves Now. But as always, you can check us out on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.